Hello, I'm Jim Wotkyns. Welcome to the 2021 Wells Group Forecast. This is the 21st annual and our first virtual pre-recorded forecast. John Wells and I and all of our 40-plus full-time brokers at the Wells Group, plus our incredible staff, are pleased and proud that all of you are viewing this from the comfort of your homes or offices. A year ago, we were right at the beginning of the ride none of us were anticipating. COVID has created a market locally and nationally that has tipped the scales. Bob and John will share that information with you shortly. We have some wonderful sponsors again this year that we partnered with to bring you this presentation. And they are, in no particular order, TBK Bank, the Bank of Colorado, Alpine Bank, American Ag Credit, Central Bank and the Malone Team, Highlands Residential Mortgage, and Bank of the San Juans. We'd like to thank you all so very much for making this presentation possible. The presentation of this year's forecast will again be available on our website, wellsgroupdurango.com, and also on our social media platforms. Please be in touch with one of our brokers for additional information. This is our 21st annual forecast and the 21st time Mr. Bob Allen of Allen & Associates has been with us to share his look back at the past and how that will relate to the future. All of the data presented is copyrighted. If you want to reuse any of this information, please contact Bob or one of our brokers here at the Wells Group for permission to replicate. So with that, I'd like to introduce my partner of the last 36 years, and more importantly, my dear friend for nearing 50 years, John Wells.
Good evening or day, no matter which time you're watching this. We appreciate you joining us. As Jim mentioned, we've done this, I think, for the 21st year now. A little different format, as it's been explained to you. So hopefully this will come off well for you, and we'll lend you some information that has some value. That's what this real estate forecast is for. Just real quick, we're going to touch on 2020 predictions. And I'll go through these very rapidly. We have 10 of them from last year. First of all, coronavirus. We'll be the first to admit that when we wrote this forecast, it was in mid or early February. We showed the last year's forecast, if I'm not mistaken, early March, first week of March. And things changed a lot as the year progressed. What do we mean by a benefit to residents? The benefit is we live in a great area with low population, and we're removed from a lot of population and the effects that has, being in a denser society, if you will. We thought this would be a benefit for tourists as well because they escape to the great outdoors. That, of course, did come back to fruition later in the year. Number 9, construction costs will impact new product price points. We hate to keep saying this every year, but we felt there might be some benefit of seeing some material prices go down in 2020. As you'll see, and Bob covers this later, that did not happen. Natural gas industry, really there's no other changes that could impact the industry. They're skinny down as far as they're going to go. They're still a big source of income for their area, but not to the extent they have been in the past. We believe that land sales would increase over the previous year, and they did increase by 15% plus. And we still see that continuing in January and February and March of this year to date. Millennial buyers, which are 23 to 37-year-olds, would be the largest sector increase in buyers compared to baby boomers and other generations, and that truly occurred, which is great to see this age group getting into home ownership. The market competition. Aging homes, we have felt and have found over the last few years, really are seeing more demand to be updated rather than to be fixer-uppers. COVID impacted this actually because there was so much more demand with the interest rates low and more people moving to the area that many homes sold without being remodeled, but it's still top of mind for today's buyers. Interest rates would stay low, and they did, but they were actually enhanced, if you will, by COVID and the economy and the Fed by keeping interest rates abnormally low. And interest in investment by investors we felt would continue to be strong, which it did, even with COVID impacting people's concerns about vacancy factors, be it residential or commercial. We have seen continued strong interest from out of area for commercial investments in Southwest Colorado. Attainable and affordable housing will continue to be an issue. It's been exacerbated by the increase in property values. It continues to be so, and it is becoming more and more a topic with our local governments. The real estate market would pace about the same as 2019. COVID changed this substantially, as Bob will show you and share with you in a moment. That being said, we thought it would pace about the same as 2019, and as you'll see in Bob's statistics, it was well ahead of 2019. So let's get to what we're thinking about 2021. We really skinnied this down to 5 items as predictions, and then we have a handful of items just as comments to share with you, again, based on what we're seeing in the industry and in the nation, not only in Southwest Colorado, but in the nation as well. Number 5, really a major issue has come to fruition, which is the incoming buyers that are moving here because they can work from home and work remotely are really moving to the top of their list, internet service, the connectivity and speed. In fact, it used to be, what is the view? Or is the treed lot what we're looking for? Or is a view of water what we want? Now, probably the first question is, tell me what the internet speed is, because I depend on that. And this is going to probably become a problem for us as we see more and more demand on these services. Number 4, in-migration will continue. Clearly, lifestyle and the population density here, which is low, but the population density outside of Durango in metropolitan areas has really become forefront with COVID. And then, of course, traffic. We all might complain about our traffic here, but anytime we go to a metropolitan area, we realize what traffic really is. So these people moving in here have the ability to work remotely. They, of course, want that internet speed, which was the first item we mentioned. And we also have in-migration from second homeowners, vacation homeowners, and retirees. So we still will expect this to be a strong part of our sector. Third, interest rates were the salvation for buyers last year and so far this year. They have trickled up some. In fact, I think even today they increased again, or this week I should say. And that will impact things because of the values of residential real estate have increased so much in 2020. And we've seen strong demand so far in 2021 that any increase in mortgage rates will have impact on a certain sector of our buyers. Affordability, this goes right down the same path. Interest rates go up, that takes a little bit of affordability away. Prices go up, that takes affordability away. And of course, the building material costs are a substantial issue. We saw a little change in timber last year, but that was very short-lived, and they're back to almost lifetime high values in regards to what the lumber markets are like. And of course, inventory, the largest challenge for buyers. But we say, where do sellers move? This is a challenge for sellers as well. A couple looks at making a lifestyle change to a different style home, big or small, or a townhome versus a single family home, rural versus in town. Then they find out that there's not much inventory for them to make a change, so they're hesitant on selling the home they considered to sell. And therefore, the buyers have less inventory to consider when they're shopping. Let's just share a few more things that are additional considerations that are important, I think, in this context of 2021. Income tax changes. Will they occur in 2021? We're not predicting they will. We certainly have to see what Washington, D.C. is going to do, not just in the presidential branch, but what our Congress is going to do. But if they do increase in regards to the income tax, the income tax on short-term and long-term capital gains, if we see estate taxes increase, these will be major changes to where money is spent. And why do we say that? Well, if somebody has some inheritance, they have the ability, most of it tax-free, to maybe reinvest and deploy those assets for investments or to buy a nicer or larger home. That may be impacted if it changes in the near future. The U.S. home ownership above the 10-year average. This ties into one item, bullet point that we have below here. But the U.S. home ownership above the 10-year average is really an almost all-time high, spurred by interest rates, of course, but also COVID has impacted this relocation of the American workforce. We throw in here for our own volition, really 51% of brokerages are independently owned, but the reason we mention that is local real estate companies or independently owned are really a fabric of the United States real estate industry. In fact, they're oftentimes the highest producing companies in their respective communities, and we have a lot of great associations with these other brokerages. What is a she session? I have a hard time saying that, but the she session really started in 2020, created by COVID primarily. What happened early on, February, March, jobs were basically closed down. Probably some people moved to working from home, but a lot of people probably just stood back, decided what they needed to do as they ran their companies. The biggest impact was and is still on women in the workforce. These women are impacted because they are the primary caregivers. Maybe they're a single mom. Even if they're married, they're still probably the primary caregiver of the children, which have been at home. They're impacted by some of their employers saying that they cannot work from home. They're impacted by industries that just are now opening up that have basically required that to create that service and earn that income has to be in the facility or the business itself. So it is a major, major impact nationally. We do not have local numbers, but we can share with you, we know plenty of great women that have had plenty of impacts from working remotely, taking care of families and children, and all the time with a new foundational 2021 COVID-related mantra. Fort Lewis College increased enrollment. The value that we have here, excuse me, is the more students that are here, we have more labor, more workforce. That is mainly for the service industries. It's going to be for hotels, restaurants, attractions, the tourism industries. And as we progress through this year, hopefully with the vaccines, we'll see a good amount of travel. We'll see restaurants, hotels recover. And these students oftentimes stay in Durango and they're part of our workforce. But also importantly, they're a big contribution to our community. They do spend money in our economy. And additionally, they bring that great youth and energy and vibrancy to our community. So we really like to watch the improvement that we've seen at Fort Lewis College in regards to enrollment. Marcy Roussel is an economist with leading real estate companies of the world. She states that we're not in the same condition as 2008 and the mid to late 2000s, which was overbuilt. Real estate had a big contribution to the recession in 2007, 8, 9, 10. What I can tell you is virtually every market is not overbuilt in the United States based on data that we've collected. Also, we can tell you in Southwest Colorado, we are definitely not overbuilt, we're underbuilt. And because of these reasons, real estate will continue to be a strong part of this economy being at a balanced level at least for the next few years. Housing sales will increase because of remote workers, and this will not change for some time. Again, the challenge is our inventory, and we believe that this is a very important part of Durango's new look. The remote workers have come in substantial numbers, and we really don't see that making substantial change as we progress through 2021. At this moment, I'd like to just go ahead and share with you that we're excited to have Bob Allen, who's helped us with this real estate forecast from the day Jim and I started it. And he is going to go ahead and share with you his great knowledge and data. So thanks again, and I know it's been said before, but we really appreciate our sponsors hanging in there with us this year as well, and also sponsoring the 2021 real estate forecast. Thank you, and let me introduce my friend Bob Allen.
Thanks, John, and
Thanks to John and Jim for putting this forecast on this year. This year's been a little challenging, as almost everybody knows. The pandemic's been an interesting year, and so we're going to do this forecast a little differently than we've done it in the past. I'm Bob, and as you know, I've been doing this for about 21 years, and we're just going to start and get right into it. The tale of this year is all about supply and demand. The supply of real estate for sale, this is all of the properties for sale in La Plata County. Supply has dropped by a dramatic amount, 35%, while the demand went up for all property types by about 30%. That was unexpected. We didn't know that was going to happen after this pandemic started back a year ago, right around now. We had a few months of very slow months, and then things started to really rock and roll in June, July, and August. The volume was way up. We had a lot of high-end sales that drove that volume number up about 46%. This is the first time that La Plata County has seen sales dollar volume above $1 billion. It's a significant event that happened here in this past year. So the housing supply, and just housing supply and demand, when you look at that, total supply of single-family homes, and that's as of December of 2019 and 2020, total supply dropped almost 70%. That's huge. In fact, I looked at that number before I did this take, and there are about 200 homes, or a few more than that, for sale now in March. It's very cyclical. And of those 200 or more homes for sale, there's about 50% of them are under contract. So that demand is still strong. As you can see, the demand in 2020 was 20% above 2019. That is a huge increase. We're not quite where we were back in the Great Recession, so we haven't set records yet, but 2020 was a big year and a big surprise to almost all of us. You look at the median sale price out in the rural county, and the rural county does not include the town of Bayfield, doesn't include the town of Ignacio, it does not include the city of Durango, but it was up almost 16% in 2020. That's a big increase. So we worry about a little bit that supply has dropped. How are we going to backfill that supply? We're going to backfill it maybe with folks that want to sell their homes and folks that have held back on selling those homes, or we're going to build some more residential units. Well, those residential units, that trend of building permits, it's low. It's stable here for the last 5 years, but it's very low compared to where it's been in the past. Let's move on to the city of Durango. The city of Durango, we see the same kind of issues. The supply dropped almost 60%. And like I said, I looked at the number of houses for sale in the city of Durango, number of stick-built houses before I came down here. What you see on the slide is as of December, today there's about 47 houses for sale in the city of Durango. And of those 47 houses for sale, 28 of them are under contract. So there's only 19 available in the market. And the demand side last year, it went up 10%. That's big, and we don't see supply. Demand is up, supply is down. We pretty much know what's going to happen to the median sale price. Median sale price rises by about 12% in 2020. We went from about 500,000 up to almost 560,000 in 1 year. That's a big increase, and that's a supply-demand equation at work. And as far as I can tell, the laws of supply and demand have not been reneged on us, or haven't been repealed. I looked at townhome sales, and this is as of back in sometime around February. But I looked today, and today there's 17 townhomes for sale in the city of Durango, right? Of those 17 townhomes, for sale in the city of Durango, they're all under contract today. There's none available. The sale price for townhomes went up almost 18% between 2019 and 2020. So that's a big increase, and I expect it to continue without any supply. Look at what we're building in the city of Durango. What's our residential building permits? How many units are we permitting every year? Well, you look up at the top left and you can see the detached single-family building permits. That overall trend for the last 6 years is down. And the same thing with attached single-family. Those are townhomes. The overall trend is down. So the trend of new supply getting built is down. So you expect with demand up, supply down, values continue to rise, and that's what we saw in 2020 in a significant way. Move on to the town of Bayfield. The residential supply and demand equation is very similar. That residential supply dropped by about 40%, whereas the demand went up about 23%. Supply is down, demand is up. Bayfield's a little bit of a twist because that median sale price didn't go up as much. And I'm not sure what happened in the town of Bayfield, but that median sale price was pretty flat. How about single-family residential building permits in the town of Bayfield? Well, those have not kept up with the demand. Those have been pretty slow for the last 5 or 6 years, with the exception of 2016 when we saw a pretty big increase. Here in the last 4 years, it's been pretty stable between 10 and 15 units per year is what they're permitting. They could permit a lot more units over in Bayfield. Land, vacant lands, it's all the same. Supply has gone way down, demand has gone way up. Last year, the supply of vacant land dropped almost 33%, whereas demand went up 85%. Vacant lot sales, big lot sales, 35-acre tracts, larger ranches. The demand for all that type of vacant land went up. And people that bought that vacant land, they're expecting to build some homes on that property, or build, there might be some commercial sales in there, but it's not a big percentage. If you look at that by price point, you can see that down there in the lower price points, so down below, let's say $300,000, those sales are strong across the board. So the demand across the board was very strong. But then if you look at back in February, the supply is half of what that demand was. So the demand was very strong, supply is way down. You would expect to see some price increase in vacant land as well. You look at the luxury real estate market, and the luxury real estate market was really as strong as I've ever seen it in my 35-year career. And that's really what helped drive that big increase in sale dollar volume. Luxury real estate market and the residential side was up 66% in 2020 above 2019. That's a big increase. Look at the vacant land increase, 200%. Those numbers aren't incredibly big. They're not earth-shattering, maybe 18 sales in 2020, but still a 200% increase in vacant land sales above $1 million. That was just huge, and none of us expected to see that. What are the forces that drive real estate demand here in La Plata County? Well, the number one force, of course, is population growth. You got to have population growth driving demand. Over the past 20 years that I've been doing this Wells Group forecast, the state demographer has predicted stronger population growth than that which we've seen. And you can see in the last 10 years, the population growth in La Plata County was only 1% per year. What's going to happen in 2020? That may change. And as you move away from that 2010 census, those numbers may get a little bit more inaccurate. So you have to depend on what happens and what you see in the 2020 census, and you can put more stock, you can put greater credence, it becomes more credible. And when we get the 2020 census numbers, those numbers might show that the population growth was much stronger. I've always maintained that population growth in La Plata County and the city of Durango would be much stronger if we had places for people to live. Without places for people to live, you choke that population growth, you keep that population growth in check. How about on the employment side? Employment dropped 35%. It dropped like a stone there in those first few months, March, April, May of 2020 due to the pandemic. And it really hasn't recovered to where it was prior to the point in time we went back in that pandemic. That, interestingly enough, is a demand driver, but we saw demand, strong demand, without that employment recovering to that employment level that we saw before the pandemic, which means we saw an influx and we probably saw some population growth during 2020. The unemployment rate has been pretty volatile, up and down, peaked out at about 14% back in April of 2020, dropped down below 7% through the summer, and then it went back up here in the late fall. What are the jobs that are growing? The jobs that are growing are retiree-generated jobs. Almost 100% job growth in that sector since 2010. Retiree-generated jobs include things like Social Security payments, but it also includes the medical sector. In the medical community, the doctors and the nurses and the physical therapists, those folks, that's the strongest growth we see in our local job growth sectors, along with some investment income and wealth. We see a little decline in the tourism sector, but that 2020 number is probably a little low because of the pandemic. So that estimate that they gave for 2020 is probably a little low. So I would hazard a guess that the 2010 to 2020 growth in the tourism sector is pretty flat. Mortgage interest rates, that helped drive demand. They fell to lows that I've never seen in my lifetime. They're a little higher than this right now, 3.2, 3.3 maybe today, but they drove that demand. As those rates fell, the purchasing power for many people grew, went up, and that allowed the demand to continue to rise. The forecast for mortgage interest rates, I got this back in February, and it's already above that average. I think I saw this morning on the news it may be 3.2, 3.3. We'll see how it ends up on the total year basis. You know, the average for the entire year may be a little bit less than 3.4. I'm not an economist, I can't tell you what I think, but we know that right now it's above 3 or 2.9. What are the other factors that impacted the local economy? Well, number one was tourism. And the tourism in March, April, May was very slow, but then most of us know that it picked up in the summer and it really got busy over the summer. But unfortunately, the train was not able to run, and Mesa Verde suffered because of the pandemic. The tourists weren't necessarily riding the train was shut down. And then Mesa Verde had an off year because they had problems with the pandemic. So overall, those tourist attractions were way down 40%. Then the airport was way off. It was off almost 50% in 2020 compared to 2019. So air travel was way off, and we depend on air travel for business travel and for tourism. We are primarily a drive-to market, but we depend on those airlines to bring folks in and out of La Plata County, and that was way off. So it showed up in the city sales tax. City sales tax was flat in 2020 compared to 2019, a little bit of an increase, and I adjusted this for that increase in the sales tax rate that happened in mid-2019. The big issue, though, however, is that city lodgers tax, and it plunged by 30% in 2020. But what's interesting about that city lodgers tax is you compare it to the county lodgers tax. City lodgers tax was off 30%, and the county's lodgers tax was up almost 30%. That's a huge difference. And what happened in the county? They started to tax vacation rentals. So a lot of the folks that were coming this past summer were using vacation rentals rather than a lot of our hotel rooms. So our hotels suffered, but the vacation rentals did very well, and that makes some sense. A lot of people wanted some space, some of their own space, so they gathered in vacation rentals in somebody's house or something that was outside of town. The energy industry is still very critical to La Plata County. It's more than 10% of our La Plata County residents get royalty income from mineral interests in La Plata County. So the price of natural gas in La Plata County and the San Juan Basin is primarily a natural gas basin. That price of natural gas is critical. And I can tell you that here in March, that number was almost $3 an MCF, so it was up. In addition, you see that the top 4 real estate taxpayers in La Plata County are energy industry companies. So natural gas and natural gas production prices are really critical for La Plata County. Where did the feeder markets, where did the people come from? There's a lot of talk about people coming out of New York or Chicago or other big cities. But the truth of the matter is the majority of them still came out of Texas. Texas has always been one of our biggest feeder market. But what's interesting here in 2020 is the number of folks coming in from Texas that are buying property from Texas damn near doubled from 2019. It was a huge increase. And the same thing happened from Arizona. The number of buyers from Arizona damn near doubled in 2020. New Mexico was fairly stable. The Front Range went up a little bit, and California was fairly stable. I don't put numbers in here if they're less than 2%, but the next one is Florida. And then there was this much broader spectrum, much broader representation of buyers across the United States. I saw representation from 45 states in this country buy property in Plata County. That's much broader than it's been in the past. Construction prices have been high, and I think they're going to stay high. One of the issues facing construction prices is the cost of materials. Lumber prices have been high over the last year. They've been volatile, but they've been high and they remain high. There aren't as many contractors as there were back in right before the Great Recession. That hasn't returned to that level before the Great Recession. So there aren't enough people to build new homes. What I hear from a lot of the lenders in town and the realtors in town is they're having trouble referring their buyers, their vacant land buyers, they're having trouble finding builders because there just aren't enough of them. And the same thing for the builders, they're having trouble finding subs because there aren't enough of them. Those contractors just haven't returned, the number of contractors just hasn't returned to the level we saw before the Great Recession. So that's a 10-year span, and it just hasn't gotten there. How many residential units have been permitted in La Plata County over the last 3 or 4 years? That trend is down. So that impacts supply. Supply of new units that we're putting into the market is down. So we're not having as many properties for sale, and we're not adding as many residential units to the marketplace. This is different than it was prior to the Great Recession, where we were building a lot of units. We're not doing that right now, so that supply stays low. Same thing in the city of Durango, the number of residential units, and this includes single family, multifamily, duplex. It's really low. That one big year you see there north of 300 units was when we permitted the Rocket Drive-In apartments, the Rocket Point apartments, and a big batch of apartments out in Three Springs. So it dropped off. So it shows you the importance of density and how density impacts the number of units permitted and therein supply. And what is going to be the supply and how many units do we permit? We need to permit some more. There's some evidence in the city right now. I've done some homework, and there's some evidence that we're going to permit some more in the city here in 2021. But if you permit them today, it's going to be at least 12 months before they're ready for someone to move in. The multifamily construction in the city is down. It's been low for 3 years. That 1 year, again, that was one big batch of multifamily units. And proposed projects, they face challenges. They have a tough time getting it approved. They have a tough time finding the land to build these units. They have a tough time finding land with infrastructure. They have a tough time with the code, with the city code, with design factors, and of course neighbors who don't want it in their backyard. Those are all part of the equation that have kept the supply low of multifamily units. In 2020, 40 of those 44 units were low-income housing tax credit units that are going to be built over by Mana Soup Kitchen. And those will be, there's a great need, and we need a lot of them. But that supply, that low supply of multifamily units, the low creation rate, the low permitting rate, results in a low vacancy rate. So the demand on apartments is strong. That limited supply results in low vacancy rate and upward rental rate pressures. Those apartment managers that I've talked to report low COVID-related delinquency rates. Some of them get the government subsidy back up when they do have a delinquency, but a lot of the apartment managers that I've spoken with in the last month are talking about an increase in rates. So I think with those low vacancy rates, we're going to start to see apartment rental rates perhaps start to creep up here in the near future. As far as commercial construction is concerned, that trend has been down too. While there's some vacancy in the retail and the office side of the office segment and the retail segment of the local market, you see that that trend has been down. So we really haven't overbuilt it. There haven't been a lot of new commercial projects built, and that's good because we do have a pretty high vacancy rate in the office market and the retail market. And you know, the office market will change. I predict that some people are going to move back into the office. I don't think as many people are going to stay home as a lot think they are. I think they're more than 50% are going to come back into the office. So we're going to see some demand on the office side come back. And with the new population growth, we'll probably see some demand on the retail side. And I predict we'll start to see that retail side. Maybe that'll start to recover in the next 12 to 18 months.